So, hold on just one second here. A few people are having technical issues. I think we're getting them worked out, but fairly easily. So, currently, where we are trading. Let me see my screen here. I've had to rearrange a couple things to make the software work. So, ES, we're trading 1858 and 3/4. That puts us right. Well, good. We dropped just a bit. We're right above. We're right into the support zone now. This is an important area because it's an open gap, and had we rotated in off of the open, and hopefully we'll get rejected out of here, right? But had we rejected in, I would have expected responsive buyers the first time up. Since we're opening in this zone, so sellers are clearly in control. So the first thing that I'm going to look for in terms of possible entries to the downside, conservatively, would be gap fill, obviously, which would be into Tuesday's low, which would be 1863 to 1865. Just realize that okay, so the issue with that, if you enter here, my expectation is on Tuesday's lows, we're going to find responsive sellers, and they'll push us back down. Once we've tested this area, since we're testing so close prior to the open, and again, this depends on where we're trading, okay? If we can get some good distance between this area and the open, I'll still take this trade the first time in. But if we open right on this area, or we've tested right in and then bounce out of this, I will be cautious on the 1856.50 to 1858.50 zone. Let me adjust Globex here to account for the move to 1857.50. Hold on one second here. And that's what I was hoping would happen, so I didn't have to screw with my zones. So, excuse me, that was correct. It's this one right here. Okay, so we now have 1856.50 to 1858.50 with 1857.50 being Globex lows. Hopefully, like I said, once we open, we'll be above that. And so the way I'll treat that is one of two ways. It's still a good shot, even without a rotation, that we will find responsive buyers in here, right? So one of two options. It makes it tricky opening up in that area. This area is important for a couple reasons. First of all, it's an open gap, but secondly, even right below it, this 1851 to 1853, this is a 50 to 60% retrace from this area here is a 50 to 60% retrace from this area here. I'll show you a larger picture so that you'll have a clue, and I'll show you in a second why that's important. Okay, from here, excuse me, there's two possible areas that people will be measuring from, okay? So right below here, this between this 1858.50, which is right where we're sitting right now, and then right below that we have 1852.34, but this whole area, and I've highlighted it on the chart from here to here, that is 50 to 62% back from this swing low to this swing high, okay? It is totally normal to have, the market moves in pretty much normal rotations like this, okay? It would not be surprising to find responsive buyers in this area, and until we get below, it would not shock me to see responsive buyers repeatedly. Now below here, if we get stuck below and are unable to recover back to the other side, then we may have an issue. So I will certainly cover that here shortly in the example when I go over yesterday. We have a prime example of that. Hold on a second. I see. Okay. So, I see what the problem is going on here. So I had to keep it like this. Guys, does that fix it? Jackson? Do you still see the matrix? Skype shows up. That's so weird. Okay, hold on one second here. Let's get rid of this. Let's get rid of this. Let's get rid of this. Okay, let's see if I can change it here. Hold on one second here. Is that back to the screen, guys? Okay, perfect. Thank you. Okay, so okay, thanks. Like I said, this should work better. I tested it with a couple of people. It should work better, but it'll take me a couple of days to get tested. But the audio seems to be better, and the video seems to be better. So what I was saying, let me go through this one more time so everyone can hear. Okay, it's a totally normal sequence. The market should have one of these waves like this. Okay, it's not a prediction of what will happen. I'm just saying I expect responsive buyers, and I'll show you in just a moment, based off of yesterday's price action in NASDAQ, why it is that I think this is an important area, and why I will be looking to be a responsive buyer somewhere in here today. So going back to the chart. Okay, so that being said, this morning, and again, with the trading, we're currently trading at 1859, so that puts us right here. So just like yesterday, I'm not trying to predict which way the market's going to go, but exactly what I want to do. So let's go through the process again. So the first thing I'm concerned about, right, with the gap down is open drive higher, or open drive lower. What's that going to look like? Usually it's 3 consecutive bars is the easiest way to spot it, where the first 5-minute bar on a gap lower marks the high and it's not penetrated. And conversely, on the upside, right, we have the same thing on the upside. First 3-minute bars, the first 5-minute bar is not penetrated, or it can be one large bar down, followed by a few kind of stutter steps, or one large bar up, followed by a few kind of stutter steps, and then a continuation up. When I see this, I have a trade plan already in mind, right? Until this is broken, until this either this high or this low right here is broken, I have a trade plan in mind. So the first thing I'm looking for when that happens is on the NYSE tick. Is it positive, and does it stay predominantly positive through the first hour? Number 2, what are the size of the rotations? Are they very small rotations, or are we getting whipsawed up and down? Large whipsaws like yesterday indicate to me usually that we're not in a trend day up or down. They usually are very fast in velocity and in one direction. They're usually pretty easy to get a read on. Yesterday was a bizarre day all the way around. Number 3, and also very important, let's see, we've covered open drive higher, in the zones. Okay, they will get to a zone. Let's say we're moving up. Okay, it'll get to a zone. Instead of coming out with a quick rejection back down, they'll tend to hang in the zones. Okay, usually I'm able to acquire my first 2-point scale and or complete exit within 20 minutes. By the time I get to that finish of that 25th minute, I am generally out of the trade. I have one of 3 options: out of the trade, moving the entry to break even if I'm profitable, taking profits and just taking it off the table, or the 4th one is moving it to whatever the swing high was and limiting my loss behind the zone. Okay, and I will, based on the pattern that I'm looking at in the market, I will adjust. Those will be one of my 4 options, and I'll simply make a choice and I'll go with it. No regrets either way. Close it, break even, take what's there, or swing high, and then just forget about the trade. That you've already done everything you can do by taking the trade in the correct location and limiting the amount of time that the market has to take your money away from you. But I can't stress this enough. Trading with leverage, time is usually not your friend. Okay, particularly on your entries. You want to hit it and you want to get out of it. Okay, next. So that being said, if I get open drive higher or open drive lower, what I want to do, if I'm going to decide to counter trade that in the first hour, is I'm going to look at the open and I'm going to look at the swing high or the swing low depending on direction. Let's say, just for sake of conversation, it was at 1865.31. I'm going to look at 1875 as the first. Maybe I'll take a short there, and I'm also going to go down and look at 1855, okay? And then when you get a situation like this, let's say we opened here and 10 up at 1855, put you right in the middle, okay? You have one or two choices. You should know before the market opens which choice is going to be yours, okay? You can either choose to take the back of this zone, and when I do that, I take a 2-point stop behind, right? Or you can choose to take the front of this zone. Okay, whichever way it is, don't try to be perfect, right? Just make your choice. There's a million trades that you're going to get in your lifetime. Just make a choice, put your order in, put your stop in. In this particular case, what I would probably be willing to do, because of the stretch, if this were me, is I'd put a trade in at the back here with a 2-point stop, knowing I'm probably going to have to reload this trade somewhere in this zone. What that means if I make that choice, okay, you got to understand what the implication is on that. But I would lose 2 points on, possibly lose 2 points on this zone, and then 2 points down, right, would stop me at 1854.5, and then reload at 1853.50 with a 2-point stop behind the zone. That means I have a potential of losing 6 points in this trade. So before the open, we have plenty of time, right? Whatever the case may be, lay out where your potential trades are going to be and what you can live with comfortably. If you can't live with a 6-point stop, right, and you know that 4 is pretty much your comfort level on taking this trade, that answers the question for you. That puts your rotation back to 1853.50. If you get filled, cool. If you don't, no problem. Move on to the next trade. Look for the next rotation. Where's the next logical entry for you? So I'll leave you with that. That's the only thought I have on that particular part of the process. So that being said today, I will, assuming that we hold this 1859 area that we're trading in right now, I will take a long at 1853.50 to 1851.50. First time into the zone, I will look for scales, and I will actually try to leave a decent sized trailer here if we open and go straight down to this for a test of gap fill, which also coincides with Tuesday's low, right? If I get this rotation right here, this creates an interesting situation. I will take, depending on the velocity at which we get into this area, so this creates a dilemma actually. This will be a good rotation in, and I would expect a rotation down. I will probably take all but a very small portion of my trade out if I take this trade in this zone, and the reason is this. Okay, so this is where a little bit of higher thinking comes. We know that this is essentially halfway back from swing low to swing high, and that we could actually get a good launch for a trailer higher. That being said, if you know that we could get a launch back to the upside from this point, right, then I'm not sure. You need to be quick on your feet on this trade if that's the case, right? Because if we end up doing one of these and then coming back up into the white zone, obviously you don't want to get run over in this process. So this zone right here is going to be harder to trade just because of that reason. I will take a short first time into the white zone. I will take a short first time into Tuesday's high, and I will take a short up here. Okay, this is going to require more work on the fly, rotation size, so on and so forth. So for my less aggressive traders, and there's no safety in trading. I can't reiterate that enough. There's simply risk. There's more risk and there's less risk. These areas up here present less risk in taking a short. Okay, this probably presents, in terms of a trade, presents the most risk. Why? Not only are you shorting at Tuesday's low, that could be a great place to get a rejection back down to the downside if we're going to have a down day or a significant trend day down, which I haven't bought into. But this could also provide, if we open in this area, test down, and then come back up, this is essentially creates a trap, right? As if we had opened above, traded below Tuesday's low, and then came back above and close in. This could create a trap right here. If we get a trap at Tuesday's low, I would expect an eventual rotation back to Tuesday's high. Would not be insane. Now, it may not be in a straight line, and it may take all day to get there, but this is where I'd have my eyes to look. This would be the other end of the range. Okay, other areas for potential traps as well. Okay, so let's continue with the downside thought first of all. Okay, so maybe a short here, definitely a short here, here, and here. On the long side, open gap, first time in. We've already tested it pre-market. It depends on the size of the rotation into this zone as to whether or not this will work. Again, assuming we're still opening right below this 1860 area, I will look for long at 1853.5 to 1851.50. Again, Globex low. Okay, if we trade below, come in and find support, and then we trade back above, right? It would make sense that we're going to trade to the other end of the range, and that would put us at Globex high, which currently is, let's see, 1866.50. Okay, so that's actually right behind this zone. It's right here. We'll replace this. Okay, it would make sense that we travel to the other end of the range. It's actually quite a nice short, right? If you take it from 1851 to 1866.50, that's a 16-point range. Okay. Next, if we fail to the downside and we get below this, the next area that I will definitely be looking to take a long, no questions asked, will be right in here, and I label it strong support. This zone right here, if these two break, become questionable. We could get a pause, we could get the 2-point rotation up, or it could flush. Okay, so this zone is questionable, and if I had to decide whether I was going to be super aggressive or less aggressive, super aggressive, it's fine to take this zone. Less aggressive, I'd wait for 1841.50 to 1843.50 would be the area I'd want to launch from. So again, you got to know who you are as a trader, and what that means is if you decide you're less aggressive, and we get to 1848.25, 1846.25, and we get responsive buyers, we come up, we trap, and then we move all the way through and come all the way back to the white zone, you can't beat yourself up and go, I knew I should have taken that. Make a decision as to what kind of trader you are and where you're comfortable. This is a much better entry. 1841.50 to 1843.50 is a much better entry than 1846.25 to 1848.25. That's my 2 cents worth. I expect strong responsive buyers in this area. If we got below this, I would be actually quite concerned about taking contra trades the balance of the day. Also realize how stretched this would have us, right? We're at 1865. This would get us past 20 points down, okay? Now, given our average day has been 20 to 30 points, but very few of those have been 30 straight down, okay? I think one of those was 30 straight down. Everything else was pretty much a range of, 15 one way, 20 the other. The total range was 35, okay? Also, keeping an eye on what is possible today. So, in an extreme situation, there's two ways I want y'all to measure, right? The first one is about 30 is the most I've seen in any kind of this market, up or down, right? So 1865, 1835 puts us 30 down. The only issue is I think if we get 30 down, right, that we have a chance of closing 30 down as opposed to finding it as a point of responsive selling. I mean, that's a lot. Just figure that's over 300 Dow points to the downside. Okay, so it's going to have to be a fairly ugly down day. It's not that it can't happen, it just doesn't happen very often. By that same token, 1895 would put us at 30 points up, considering that we're opening at, so what I do to get an idea of scale so I don't get lost in the minutia through the course of the day, if we open at 1860, I'm going to very simply go to my chart from the open, and I'm going to mark it off. 1860, 30 would put me at 1890, 20 would put me at 1880, right? And then 10 up from there. I want to have a scale so that I don't forget while I get lost in one trade, so I don't get lost in the whole mess of it, and I understand where we are scale-wise. If we're up 25, I'm not so certain that I want to try to take a long for the last 5 points. I pretty much, if I haven't gotten long by now, I've missed the bulk of it anyways, right? And then conversely, the same way, right? 1860, 30 down from there, puts me right down here in this support zone right here. But is it likely we get there? So I want to mark down 30. I want to mark down 20, which puts me right into strong support where I expect to get responsive buyers. Most of the time, plus or minus 20 will get you a good location for a contra trade back the other way. The other thing I want everyone to keep their mind on is this. Of course, my time scale on this chart is still messed up and I haven't been able to fix it. But for Central Time, 9:30 a.m. to 11 a.m. Okay, these are prime hours to get a reversal, and the pattern on most days, yesterday, by the way, was not an exception. We'll look at it in just a second. Yesterday in the morning when we got to we had a reversal prior to 9:30, but when we got to the peak on the upside, I believe it was just past 9:30. Just past 9:30. And then I believe it pushed to the downside. So at any rate, hold on a second. There we go. I finally found out how many people can get in the meeting. 25. There we go. So I might have to buy a license for TeamViewer if everyone likes it. That's fine. We'll fix that. So keeping an eye on time. So I want to be clear on the strategy today. I'm going to let the market dictate where I'm going to take my trades. I'm cognizant that we're gapping down below yesterday's open. So that puts me, yes, I'm aware. So that puts me in a place to have to make a decision. First decision I have to make: do I take this trade, and do I push lower from here? Right. In other words, we come in, we test Tuesday's low, we reject, and we come down. First time in, question mark. Depends on the size of the rotation into Globex low. Like I said, I normally expect responsive buyers. We've just tested it so close to the open that it's hard to say. I will definitely take a long here. If I'm less aggressive, right, and we're all aggressive, we're trading futures, I'm taking it here. If I'm normal aggressive or very aggressive, I'm taking here and I'm taking here. One of the two. Again, I'm measuring the rotation to figure out where I want to take that location. I may skip a long. If we break here, I will take a long from 1843.50 to 1841.50. I'm telling you that right now. Here and here are shoe-ins for me. 1853.50 to 1851.50. I'm taking that long. 1843.50 to 1841.50. I'm taking this long. This I'm not sure of yet. It'll be based on price action. And if I can call it out, I will. Know your trade plan ahead of time. On the short side, right, this area becomes questionable simply because of the potential for a trap trade and the lack of rotation that we would have getting into this, depending on where we open. If we open at 1860, right, a 6-point rotation is what I want minimum. That puts me right at the back of the zone. I'm willing to take a 2-point stop, perhaps, if we get back here, first time in, if I can get to the back of the zone, back to the downside. I am cognizant that we can flip back around, close above, and push to the other end of the range. First time into the white zone, right, on a good rotation, I'll take a short. First time into Tuesday's high, I will take a short. Remember, my primary objective is not to capture these scales, it's to capture 2 points on each of these trades. If you trade large enough size where you're leaving trailers, that's great. But if you're not, if you're a 1-contract trader, even if you're a 5-contract trader and you're not certain about capturing the scales or you're uncertain about the traps that I discussed, take your 2 points and go home. Be happy. You can make millions of dollars, literally, off of 2 points per trade. You don't have to do anything more than that. So I think I discussed pretty much my executive summary of where I'm taking trades, which was definitely here, here. If we break this, maybe here, but definitely here at 1831.32, assuming we don't hit these in the last hour, right? Last hour, bets are off. I'm not going to try to be a Superman in the last hour. How am I doing on time? 8:15. I want to show you something on NQ yesterday of why this area is so important, okay? And we were off just by a hair, but not too much. Oh, one other thing important, NQ. If NQ is leading us to the downside, guys, and you see ES with strength, you need to see you need to see NQ come around and start leading. Otherwise, it will drag ES down by its ponytail, okay? It's not that you're matching it tick for tick, but just generally look, right? Is the size of the bounce in NQ equivalent to what it is in ES, right? If it's not, be cautious on the ES bounces. Conversely, if ES bounces a little, but NQ's on fire and rocketing to the upside and setting new highs intraday, be cautious on the short side on ES. It's rare that ES pulls NQ down. Usually NQ is pulling ES down or dragging it up. So let me find my chart from yesterday. Here it is. Okay, yesterday morning in the meeting, I highlighted this area, okay, as being 50 to 62% retrace from swing high down to swing low. This was essentially the middle of this trade. Okay, so you see we got immediate rejection out of the open, okay, out of this area. We traded through. You see they tried to reject it a second time. They got short squeezed, pushed above. Okay, this is a trap right here. When it fell back below the open, okay, they were trapped. They backside tested this area. You can see that right here. And it was good night. And I said that this is a good area to launch swings from. That being said, I was fairly agitated with myself because I totally jacked this trade up yesterday. I should have had a monster trade. I saw it coming. Okay, so we are not guaranteed the same response from that 50 to 62% retrace on ES today. But you need to be aware of it. Also, it wasn't easy, right? If you entered this trade here at 37.20, okay, so normally, let's consider this a zone. Normally I have a 10-point stop on NQ. So this would have survived if I could have just pulled my brain around quick enough to realize that I was missing my own calls. Okay, got it. I'll fix that later today. But that being said, these are important areas. This happens again and again and again where we get these retraces. This is a natural, these retraces are a natural way that the market functions. It doesn't necessarily give you perfect location. You have to kind of work with your stops, right? You entered 37.15, and if you entered right at the front, right near 37.15, you got pushed 10 points back and could have gotten stopped. So it was not necessarily the easiest trade to get into, but you had to be cognizant that the area as a whole is important and that you'll also often find responsive swing sellers from that area looking for a swing back the other way. This is where we're at, and if you look at what's back the other way in terms of NQ, right? So let's look at that really quick. There's no more. Okay, this is 50 to 62% back from this swing high, excuse me, right here, right down to here. We've already completed, and we came and we could close that entire area, okay? The one thing that I'd be looking at on NQ, by the way, an important area, and I have not set up my zones today for NQ. I'm going to jump off here in a second and do that. 819. Okay, that is the one area, this area right here, this 3670. I'm not sure that we're trading there this morning. We're trading right above it. We rejected from 3672. 3670 area, so really all the way back down to 36, I make that zone 3670, really down to 3663 since it's an important area. I would look to see if we get responsive buyers from this area. This would fill this gap, is all it would do, and we could easily get a move back to the other side of this range once again and push back up. Okay. The other thing that I would look at that I think is important on NQ is this right here. Is this trend line that's been broken? And I want to switch this really quickly to a 60-minute chart. Excuse me, well, it hasn't been broken, but here. Okay. Bigger picture, we're fine, obviously. Okay. That would put us roughly at 3,600 right now, and that's not a big stretch, right? We've seen 60-point intraday stretches. We closed at 3668. Just below 3,600, 3,590 if we get into it, would put us at this long-term support line. I would have a heads up on my notes today that if we get down to this 3,600, look for responsive buyers, both on ES and NQ from this point. It's rare that we get down to a long-term trend line like this, right? And we don't find a snap off of those levels. Okay, I will be trying to launch some swings and some options plays out of this 3,600 level. If I'm going to lose money, that's a great place to lose money. As we bring that a little bit closer in, trend line wise, what stands out to me the most is two things. Okay, so there was two trend lines. One that kind of avoided all the news lately, which would have been like, looked like this. Okay, and you see that they try to find support off of it. We closed below, and we could easily have a backside test of that. But the other one is if you take it from the absolute swing lows, right, and that puts us again 3680, 3660, depending on where we open today, which is where we're trading right at the bottom of that, 3673. So this area, there is a trend line that's working here. I question this trend line, and the only reason why I question this particular trend line right here is because this was manufactured on news that pretty much everyone disregarded after it came out. And so had this news not occurred, in my head, I assume that would have filled in this blank right in here, and that this trend line would have held. So I'm considering this trend line that's been holding this up for days and days in this narrow range is actually broken to the downside. And so, again, the area I look to most likely offer a fantastic response outside of that open gap that we have right here below that is this 3,600 to 3,590 area right in here for a responsive buy, and that would be either put us right here, or the other areas there's an open gap sitting right here just below 3,580. Okay, so I'll be watching the price action as we get down to those areas. Really, that's all I have. I'll update the charts. I need to get these charts out to my clients, so I'm going to jump off. For those who couldn't get on, I'm sorry. I'll put the recording up as quickly as possible. And I hope this went well. I may buy TeamViewer. I want to try Cisco's WebEx one time before I make a decision on which one I want to use. And we will try, we will give WebEx a shot tomorrow, and then I will make a decision as to which service I'm going to use going forward. I hope everyone has a great day, and we'll talk to you soon.